Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on today.
Happy to be here.
Well, let's start with Wall Street, where we've seen a lot of volatility lately, but there was a bounce back on Tuesday. The S&P up almost 1.8%, the Nasdaq almost 2.5%. The Omicron variant is taking over, though, and there's also the hold up on the Biden administration spending bill. What's the story in the global markets?
Well, it's been a somewhat strange 2 weeks for the U.S. market. After falling early last week, the market rose on Wednesday after the Fed announced that it would accelerate tapering and possibly accelerate interest rate increases as well. Usually with a news like that, you'd expect the markets to fall, but instead it rose. At the time, the analysts interpreted the results as saying that the market had already incorporated the tapering acceleration and up to 3 interest rate increases next year. But then right afterwards, the market started falling. So again, the analysts attributed the fall to the rising Omicron spread in the United States, some European countries heading back toward lockdown, such as Netherlands. And on Sunday, the U.S. Senator Joe Manchin has stated he will not vote for President Biden's $1.8 trillion Build Back Better program, which would likely kill the program, which includes nearly $2 trillion worth of government spending over 10 years. Goldman Sachs, as a result, early this week have cut back on U.S. growth forecasts for the first 3 quarters of 2022. But then, as you just stated, the markets have actually rose after that bit of bad news. Apparently, the analysts are saying that because the stocks have fallen in the last few days, they see this time as a good time for going after low-value deals. So that's why the market is increasing. But still, it has been a very strange 2 weeks. Markets are heading back up since Monday, though the indices have not yet returned in the U.S. to last week's levels. European markets tend to follow the U.S. path. So again, they fell in the early part of last week. Then it started rising and peaked on Thursday and dropping at the latter part of the week and rising at the early for Monday and Tuesday this week. For Asian markets, Nikkei and Shanghai have taken a similar path to U.S. and Europe, but Hang Seng has been pretty much falling throughout all the last 2 weeks. But all of the Asian markets have been rising since Monday, and Hang Seng and Nikkei were rising today, but Shanghai was falling today.
Well, today Korean stocks started out strong, but those gains faded by midday. We saw the big chipmakers higher, some weakness in pharmaceuticals. The KOSPI still below 3,000 points. Tell us about the trade today in Korea.
Okay, well, after the slow rise last week and breaking the 3,000 barrier on last Thursday, KOSPI fell back below 3,000 on Monday, though it has been rising again very slowly since Monday. Now, you mentioned that the Samsung and SK Hynix stocks have been rising. Part of the reason why these stocks have been rising again since Monday has been that foreigners have been buying Korean stocks again, but they have been concentrating on IT stocks. Now, the spread of Omicron, the possibility of spread in Omicron, as well as Omicron spreading in the United States and Europe, have been pulling down the Korean markets. Foreigners seem to think that the Korea not declaring lockdown or shutdown as harshly as the European countries are a positive element for Korea, so that's bringing some money back in, which accounts for the rise since Monday. KOSPI ended today at 2,984.40, up 0.31%. Individuals sold, institutions and foreigners bought. For KOSDAQ, after a very slow rise, reaching a peak on last Thursday, markets have been falling over the weekend, and it fell below 1,000 on Monday. But it, again, like the KOSPI, it has been rising very slowly again, and it barely broke 1,000 today. It ended today at 1,000.14. It was up 0.54%. individuals and foreigners bought. The foreigners bought very little on net, and institutions sold.
Well, zooming out a little bit, we've seen the dollar index rising the past several months, which means the Korean currency, if you look at a chart, it's been losing ground quite steadily all this past year. We're now at about 11.90 to the dollar, while a year ago we were around 10.80. Interest rates rising, of course, in the U.S. now. What's driving the exchange rate now, and what's your outlook?
Okay, well, the U.S. dollar has been appreciating very steadily, as you said, all year, but especially since December 9th. It has been continually appreciating against the won, except for 2 days, December 16th and 17th, which was ironically the days right after the U.S. Fed MOMC meeting, which roughly tracks what is happening in the U.S. and European stock markets, the temporary high that we saw there. Now, for the Korean won, the largest movement took place over the weekend when it lost nearly 10 won per dollar, when it depreciated nearly 10 won per dollar. And it seems that the reason for that is that the foreign exchange market, not only for Korea but the world in general, are steadily moving toward the U.S. dollar. Most analysts are interpreting this trend as a trend moving towards safety for international investors, currency investors, due to the growing spread of Omicron variant and other related uncertainties dealing with the availability of vaccines and the bottlenecks. Some analysts are also saying that it is due to tighter monetary policy and potentially higher interest rates by the Fed. This interpretation personally seems a bit unlikely since Korean won gained strength right after the FOMC meeting, but still, that may explain the long-term trend of the strengthening U.S. dollar. Most analysts say that the U.S. dollar will continue to appreciate at least until the end of the year. It ended today at 1,192.50. It appreciated today by 0.04%.
Well, now, Professor, a really hot issue, the housing market. There's talk about bringing down the punitive taxes put in place by the Moon administration on people in Korea who own multiple homes. Officials in the government and the Blue House, though, expressing opposition to that, but they are looking at easing taxes on people who have just one home. Tell us about those discussions and what you make of the situation.
Okay, well, the property taxes for this year went up for almost every property owner, and it rose for most homeowners in a very large amount because of three factors which hit the housing markets at once. The first is that this was pre-planned, but the government decided to raise the assessed value. They wanted to bring the assessed value closer to the market value, and this was, as I mentioned, a planned move, which was notified years beforehand. Second, there was an increase in tax rates, which are tied to the assessed value, because Korea's taxes are based on assessed value rather than market value. And this was an attempt by the current government and the ruling party to try to control speculation that they thought was responsible for higher housing prices. And then the third, we've talked about it many times, the third factor is the rise in housing prices itself, partially because of the shortage of housing units in the popular areas around Seoul and metropolitan areas, and also the very loose monetary policy. So the ruling party and the government was counting on the increase in tax rates, increase in the assessed value to bring down the housing prices by inducing people to sell, but they did not fully recognize the possibility that housing prices would rise so high during the last 2 years, which actually was a critical failure because it could have been forecasted. So ruling party, because of this mistaken forecast, now has a lot of angry voters who had to pay increase in taxes, which were a lot higher than they had estimated just a few months ago, and even for single-unit house owners who thought they would be relatively safe, a lot of them got hit with a significantly higher increase in taxes as well. So the ruling party is sort of struggling now to counter this wide tax resistance, especially with the presidential elections coming up. And the ruling party candidate for president, Lee Jae-myung, is advocating some measures like reducing property taxes by using assessed values for this year for next year's taxes, or to exempt transfer taxes and some parts of the property taxes temporarily for 1 year. But the government is not enthusiastic about the move. The ruling party is mixed. The part of the ruling party which stands with the president, they do not like changing the policies that they have made, but the part of the ruling party which stands for the new candidate do want these changes to go into place. Will these changes in laws or exemptions and deductions, will they go in place? I think that depends on if the presidential candidate Lee Jae-myung wins next year and how widely does he win by. If he has a solid margin, then he has a good chance of pushing through his proposals. If he squeaks by, then I don't think he'll be able to put these laws through, because there's going to be a lot of resistance by the government, which is facing a large government deficit next year. If the opposition party's candidate wins, well, he's promising changes in these tax laws and real estate-related laws anyway, so we'll probably see those laws being pushed through.
Well, people looking to sell their homes will be watching this race very intently over the next 4 months or so. Professor, we'll have to leave it there for today. Thank you for sharing your insights with us.
Thank you.